All right, let's dive right in. We are unpacking one of the biggest stories in finance right now, and that's the absolutely historic surge we're seeing in gold and silver. It's like a perfect storm of factors is pushing these metals into record territory, and we're going to break down exactly what's going on.
I mean, just take a look at these numbers for 2025. Gold is up a massive 62%. That's huge. But the real story, the thing that's making everyone's head spin, is silver. It is just dramatically outperforming, up an incredible 103%. And that massive gap between them, that's a key part of the story. And this isn't just your typical market rally. You've got veteran analysts like David Erfel, guys who've been in the trenches for a quarter of a century, and they're saying this is a historically significant moment. When the experts, the people who've seen it all, say they've never seen anything like it, you know something really big is happening. To really understand the scale of this move, you just have to look at this one number, $50. For silver, that wasn't just a price, it was a ceiling. A wall of resistance that has held strong for nearly half a century, all the way back to 1980. And silver didn't just tap on the door, it absolutely shattered it. So what in the world is powering this perfect storm? Well, the first major force, and our sources all point to this, is the U.S. Federal Reserve. Their policies are basically the primary fuel being poured on this fire. You've probably heard this term thrown around a lot, quantitative easing, or QE. It sounds complicated, but the effect is actually pretty simple. The central bank basically creates new money to buy financial assets. This floods the system with cash, and for a lot of investors, that's a huge red flag that you're devaluing or debasing the currency. And this creates a really clear chain reaction, like a set of dominoes. Step 1, the Fed cuts rates and starts buying bonds. Step 2, a flood of new dollars enters the system. Step 3, people start to question the long-term value of each of those dollars. And that leads directly to step 4. Investors run for safety in hard assets, things with real intrinsic value like gold and silver. And get this, back in December of 2025, the Fed did exactly that. Yeah, that December was the key moment. The Fed cut interest rates and started what some analysts are cheekily calling not QE, QE. They started buying $40 billion in government debt every single month. The critical point here is that they are actively easing policy even while inflation is still above their 2% target. And that, according to our sources, creates the absolute ideal conditions for precious metals to soar. And all of this is happening against a backdrop of government debt that looks totally different from the last big gold run in 1980. I mean, look at this. Back then, a $1 trillion national debt was a shocking front-page headline. Today, the U.S. adds another $1 trillion to the debt every 80 days. The debt-to-GDP ratio has just exploded from a manageable 35% to a staggering 135%. Okay, now let's talk about the amplifier in this storm, silver. Remember how it was blowing gold out of the water? Well, that's because it has its own incredibly powerful story going on. See, unlike gold, silver is basically being pulled in two directions at once. It's fighting a demand war on two fronts. On one side, it's an absolutely critical industrial metal. You can't have high-growth sectors like solar, EVs, or AI without it. But at the exact same time, it's also that traditional monetary asset, the classic inflation hedge. This two-front war is creating just immense pressure on its supply. And you can really see that pressure mounting. For 5 straight years, the world has actually consumed more silver than has been produced. A deficit that goes on for that long? Well, it's just not sustainable, and it's a huge factor driving this explosive price move. And listen, these aren't just abstract numbers on a screen. These are signs of a real-world physical scramble for metal. Inventories at the big exchanges in London and New York are plummeting. We're even hearing reports that big trading firms are going directly to the mines and offering them huge premiums, like 20% over the market price, just to lock in supply. The squeeze is very, very real.
Now let's zoom out, because this isn't just a story about markets. A theme that keeps coming up in the source material is that this could be about a fundamental shift in the entire global financial order.
Experts are starting to ask this very question. There's this de-dollarization trend that's really picking up steam, led by groups like the BRICS nations. And you're seeing central banks, especially in the East, just gobbling up physical gold and moving away from the US dollar at a pace we've never seen before. One analyst, Ronald Stoffler, describes it as the world splitting into two different monetary zones.
You've got the US-led system, which is backed by things like US treasuries and technology, and then you have this emerging China-led system, which is increasingly backing itself with physical gold. It's really a battle of trust. Do you trust our government bonds, or do you trust our gold?
And ultimately, what these sources are suggesting is that this whole rush into gold reflects a fundamental loss of faith in the government-issued currencies themselves. The very definition and the value of money is being questioned on a global scale.
So what on earth does all of this mean for investors? Well, when you're facing a storm like this, the old traditional playbook is basically being thrown right out the window.
For decades, the gold standard of investing was the 60-40 portfolio, 60% stocks, 40% bonds. But now, for the first time in ages, you have major investment banks telling their clients to move to a new model, one that cuts their bond exposure in half and adds a significant 20% allocation to gold. They're saying bonds just don't provide that safety anymore.
And here is what is absolutely wild. This number shows just how early we might be in this whole trend. Despite these record high prices, high net worth investors, the so-called smart money, currently hold only a tiny 0.5% of their assets in gold. If that number starts to move even a little bit towards that recommended 20%, you're talking about hundreds of billions of dollars flooding into a very, very small market.
And for the everyday retail investor, silver has this incredibly powerful psychological pull. It's something called unit bias. Because silver's price per ounce is so much lower, it just feels more accessible. You know, you might not be able to afford one full ounce of gold, but you can buy several whole ounces of silver, and that feels more complete, more rewarding. And that feeling is helping to fuel its dramatic outperformance. So when you put it all together, the Fed's monetary policy, a real physical supply squeeze, and this massive global geopolitical realignment, it really suggests we're sailing in uncharted waters here. The one thing that all our sources agree on is that this is way more than just a simple market cycle. The perfect storm is here, and this story is far from over. The only question is, what happens next?